Yeah, we know that geopolitics has been affecting the market greatly. How can we be able to use that data, connect it with our technical analysis, have good results on weekly basis? Welcome to our weekly forecast on dollar index, GBP, USD, and gold. If you are just joining for the first time, I'm called Market Mover. Don't forget to subscribe on this channel and also turn on the notification bell so you don't miss out on our videos that will be coming up consequently. So looking at the dollar index right now, so we'll start doing a top-down analysis from the weekly time frame, looking at what actually happened last week and be able to forecast for this coming week, and also in connection with the tensions rising in the Middle East. Right away, we're just going to go to the chart now. Looking at the weekly time frame, so we can see that on the dollar index we have a short-term bearish market. Dollar index, we have a short-term bearish market right now, and long-term it has actually been bullish. So with this is actually a retracement into a key zone for the bullish continuation. But two things actually lies here on this dollar index, which is not certain, because both the buying and the selling pressure, it's yet to be decided with the current situation that is going on. So geopolitics has actually been affecting that, and also looking at it technically, we have key levels which we can consider resistance levels at 98.80 to 99.20, and a support level around this point around 98, which holds as a support level. And now with this data, you can have in mind key zones which you'll be expecting to see price breaks before you can say that you're going to have either a bearish continuation or a bullish continuation. So looking at this, we're gonna see that if price can be able to break below 98, then we can possibly see a bearish continuation likely, and above 99, then we can see a bullish recovery. But short-term buyers, we have bearish. All right, we have bearish, and it is actually the higher probability which you can be able to look out on the dollar index. And then for the bullish scenario is going to be the lower probability actually on the dollar index. So without much wasting of time, so marking out the key zones at which price is currently reacting from. So we can see that we've been actually consolidating on the dollar index for quite some time now. So this is actually a ranging zone which price has been no good price displacement from this level. And key points which you want to gather from here is after this short-term push to the upside, when price rally from this level to the upside, we see that it actually took out this low before that push happened. So that was actually a sweep of liquidity at this particular point. So we have a sweep of liquidity there, and price is actually reacting from an order block zone. So we can see price sitting at the bullish order block zone and levels of liquidity. The next target which you can look on this weekly time frame, you would be identifying this high has not yet been taken, so it can actually be a key point of interest for price to push up to that level considering this weekly time frame. So that is actually going to be a buy side liquidity if possible that price wants to pull up to this level. Those are actually going to be the levels of target, and previously this high, that is the protected high we have right there, and this is the protected low as of the moment, which we can actually be able to identify right now, previous weekly low. And before we had the breakout from here, you see that we had a very ranging market for quite some time before the breakout from this level. So this is now holding as a strong break and a retest level. We can see we've had multiple rejections from this breakout point, which the market has been finding it difficult to continue pushing to the upside, just based on the fact of what actually happened with price as well, the reaction from that particular level. So we'll go to the daily time frame and see what we can be able to reduce on the daily time frame. All right, so looking at the daily time frame, I can see that right now we have price still reacting from a continuation level from this point. From this daily time frame, price is still reacting from a continuation level, and there is a possibility that you can have a drop up to this point, because we still have a zone here. So price can be able to drop to this level before a push to the upside, having in mind that before price actually dropped from here, we had a gap from this point which price has not yet filled. So if it should be able to rally back to the upside, definitely it will be coming for this gap to actually be filled. So my expectations for this coming week will be for price to first of all give us some drop before price rallying back to the upside to fill this gap. All right, so areas at which we can have that drop into, looking at this daily time frame, so we have these levels at which price can be able to drop into before rallying back to this gap which it was created previous week. So that is actually the expectation of the dollar index. All right, so I'll be expecting price to first of all give us a drop before rallying back to the upside, considering what is actually happening. So we want to also look at the fundamentals for this week, knowing what is going to happen on the dollar index. So we have interest rates that will be coming, and the expectations is actually for it to remain the same. So if the Fed likely hold rates, then definitely we're going to be seeing no reaction from the dollar index, possible a bearish move. If we continue seeing also a calm with the tension that is going on, no escalations, but having a calm, then the market is actually going to drop on the dollar index. So any dovish tone from the Fed will mean a bearish DXY for this coming week. So we'll be looking at that, and also FOMC will be coming out as well this coming week. All right, but if risks of returns, then the dollar index is actually going to spike to the upside. So looking at the 4-hour time frame, I think we'll end on this 4-hour time frame, also get the levels at which we can have possible retracement before price can be able to rally to the upside. So like I said, we have a key resistance level at 98. So we can see that here we have this key resistance level at 98, and price also reacting around 98.60, then price sitting at a support level of 98. So on the 4-hour time frame, we can have a drop to this zone here for price to push to the upside. So we have two levels at which price can be able to drop to. So we have that, and also this key zone here. And also looking at the displacement from here, you want to get a discount level. So for us to actually have a good discount level, we'll be seeing that these two zones are actually sitting at the discount level, but more preferably the last one sitting at the extreme level for the buyers to actually come into play. So that would be the expectations of dollar index for this coming week. I would need to first of all see a drop into this level before price rallying back to fill the previous weekly gap that was being created, or getting into this level to give us a push to the upside. So that is my expectation for DXY.